Hi there, welcome to Grain TV. It's Wednesday, July 20th, another punishing day in the grain market. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, beans giving up 17 cents a bushel on old crop August, off 20, and new crop November down to 10.06 on November. Wheat in Chicago off 4 1/4, and corn managing only a 3-cent loss. Really, today was pretty much holding ground for much of the night session and into the morning session. We actually had some positive gains on the board at one point, but when the weather models came out at midday, that basically sent the markets, especially beans, sharply lower. You know, the midday model was not much different than yesterday's model, which of course was pretty favorable for growing conditions. So most traders are looking at the situation with very good crop condition ratings, pretty mild to benign weather in the coming 2 weeks in the time of critical growing season for soybeans, and so they took that cue from the model today to punish it down lower again, getting new crop corn almost down to $10 before getting a little brief rally at the close. You know, other news in the international market, exports out of Argentina are sort of slowing for corn, even though their harvest progress is picking up on dry weather. They're seeing a little bit of a trucker strike down there that's slowing some ports there. You know, in all likelihood, this is, you know, just another short-term ramification. We see these port strikes either by dock workers or by truckers. They usually are very short-lived and have very little lasting impact. I suspect this will be the same thing in that situation. Turning now to the Wednesday EIA ethanol numbers. These numbers were positive for production, where we saw production exceeding 1 million barrels per day, up 25,000 barrels per day from last week. Stocks, however, are holding very high, up to 21.16 million barrels overall in stocks. And also, speaking of EIA, you know, we had crude oil numbers that came out. Crude oil stocks were cut more than expected, but the bad news in crude was the big build in gasoline inventories. Traders had been looking for a cut in gasoline inventories, and instead we got a fairly big increase in gasoline inventories. So crude oil probably still having some defensive action here, at least for another month, until we can see the gasoline market turn around, which it has not been able to do for much of the summer. Turning back to grains, let's take a look at the weekly corn chart. We talked about this yesterday, and I think we're going to have our sights set on that low back in 2014 at 318. This is the nearby corn futures contract on a weekly chart, and you can see we've basically broken down below that sort of 350 mark. We traded as low as 335 today before closing a little bit above that, but I think overall we're probably going to make a run at that 318 mark before this season's all over. If we look at the 5-minute bar chart from the Grain Hedge trading platform, you can see, you know, it was basically a down day all the way from the morning open, you know, eclipsing down at 335. I guess the good news is we did get a bounce off of that 335 low in the last hour of trade and managed to close above that. So watch that 335 mark. That'll be our now support level, because that's the lowest price we've reached in this downward move. And so watch 335 if that will be able to hold in the near term. I wouldn't be surprised to see some bit of a correction here. We have taken a punishing blow in the grain markets, and maybe traders will take some profits here as weather sort of stabilizes. That's all we've got for today. Tomorrow, join us. We'll be talking about the weekly export sales in corn and beans. We're looking for a combined 1 million metric tons, old and new crop both. For wheat, we're looking for around 300 to 500,000 metric tons on wheat. So look for those numbers early in the morning. We'll be talking about them on Grain TV. As always, if you're interested in learning how we can help you in your own grain marketing situation, visit us online at grainhedge.com. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.